This report brought to you by the Richmond Club, where investors and high-growth companies meet.
Okay, thanks very much, Greg, for the introduction. Again, my name is Piyush Varshney. I'm the president and CEO of ZincX Resources Corp. We're listed on the TSX Venture Exchange. We're based in Vancouver. Our projects are in British Columbia. And we've got two primary projects. One is the Akie property. That's our flagship property. We've got, a large defined deposit there. It's over 30 million tons of 10% zinc lead. That's been our main focus. And we've got the Kechika Regional Project, which is a 140-kilometer stretch of very prospective claims in the belt. So it really is a district scale opportunity next to a flagship deposit. Zinc, as many of you know, it's a construction and infrastructure metal. Primary uses for rust-proofing steel. It's anti-corrosive properties. So usually anywhere where there's construction, there's a coating of zinc on steel. And certainly with a lot of the developing nations expanding their infrastructure and been building out, and the US having its plans as well, there has been a nice increase in the demand for zinc over the last 2 or 3 years, and it coincides with the depletion of some of the largest zinc mines in the world coming off stream. So if you follow the zinc market, the price of zinc has moved up nicely over the last 2 to 3 years. Currently trading about $1.21 per pound of zinc. So here you can see, there is a structural deficit that's in place, where you see these growing shortages right through to 2020. The longer term, going out to 2025, here's primary sources of zinc, secondary sources of zinc, and here's the demand side of zinc. So you can see that the gap that's being forecasted is widening over the longer term. So certainly, zinc isn't the sexiest metal, but it is one of those ones where the fundamentals are very strong, and most agree that the zinc market is a very bullish case. And the reality is there's very few zinc juniors out there. There's only a small handful, and if you look at them in detail, you'll see that most of them don't have the size of a deposit that makes sense to put in production, or the grades aren't attractive enough. There's metallurgical problems often, or the jurisdiction's not so good. So in that small handful of zinc juniors, there's very, very few, I think, that are really worth putting some money into and investing in. Management director. So myself, I work at a family office in Vancouver, Varshney Capital Corp. I'm in charge of the resource side of things. We're one of the founding families of Mountain Province Diamonds, which is a large diamond mine that's up in production up in the Northwest Territories of Canada. De Beers is our partner on that one. So that was one where we were involved in the very initial discovery hole. And 2 years ago, the mine was, the construction was completed, and it was commenced operations September of 2 years ago. And so we're also involved in a lithium deal, E3 Metals Corp. My brother is the CFO, involved in more technology. We were one of the founders of Mogo Finance. BMO took that public, $50 million IPO. Dr. John Thomas is on the board, a PhD. He's a metallurgist. Marco Strube, portfolio manager out of Zurich. Ken McDonald's our VP Exploration. Ken, very strong technically, lives in Prince George, which is closer to our project. And Ken used to work for the BC Ministry of Energy and Mines, so he knows the permitting side of things very well. So Ken's got a really strong skill set for where we are with our project in terms of now permitting and moving the main development forward. And Nick Johnson is our project manager, lives and breathes the deposit. So we are the dominant landholder in the Kechika district. We own 100% of our projects. The main property has 151 drill holes in it. Teck and Korea Zinc are our neighbors. Here you can see we've got 165 million shares out. Currently trading at about 39 cents, sort of between our 52 52-week high and low. Do about 300,000 shares a day. We've got about $3 million in the bank. And there's our share price chart. So basically, when we put out a PEA in late June, and that's where you can see the share price moved up from sort of the low 20s all the way up to 75. And it has settled back down in sort of this range here. But you know, we'll go through a peer groups comparison shortly, and we remain extremely undervalued at these levels. And again, I think what we have is certainly amongst the highest quality in the zinc space. Some of the large groups we've attracted as shareholders include Tongling Non-Ferrous Metals. They're a state-owned enterprise out of China. They're the same group that bought out Corriente Resources about 6 years ago or so. They paid $680 million for undeveloped copper deposits in Ecuador. So they're our largest shareholder. Jintuo is a Chinese investment group. They own about, so Tongling is about 30% of our company. Jintuo owns about 6%. Teck and Korea Zinc are small shareholders as well, but they're on our shareholder roster. More importantly, with Teck and Korea Zinc, which I'll get to in a second. So here we have the Akie Project. You can see our camp, see our drill core, and the road that goes right to site. Right now, you can drive to the deposit all year round. There's road access all year. But here we are. So there's the main deposit, property Akie. We call it the Cardiac Creek deposit. But we also own this entire belt. It's 140 kilometers of prospective claims, 80,000 hectares. Our neighbors are Teck and Korea Zinc in blue here. So there's our main project. Teck and Korea Zinc's Cirque deposit is only 20 kilometers away from ours. And these pink properties here, these earlier stage claims, are ones that Teck and Korea Zinc have joint ventured with us. So we have, for the last few years, we've had large mining groups doing early stage exploration on some of our properties here. So, it really is an area where there's large deposits to be found and discovered. These ZincxOct deposits are often found, as you hear all the time, pearls on a necklace, and so they're usually found in a series. So you got a big deposit here at Cardiac Creek, you got a big deposit here at Cirque. Our Mount Alcock property here, only 20 kilometers from Cirque, a historical drill hole there was about 9 meters of about 9.5% zinc lead. So for shareholders, the value proposition, of course, is the main development of the Akie property, but also that blue sky potential in the belt of new discoveries. Here's just Tongling, where I visited 3 times. Tongling's come to Vancouver about 3 times. They are a fully integrated mining group. They have projects, they have mines, they have smelters. So that's just me visiting Tongling. Teck and Korea Zinc, as I mentioned, they've joint ventured 3 of the earlier stage claims. They actually spent $3.5 million in cumulative exploration to now have a 51% interest in those 3 earlier stage claims. And we're going to move those forward and continue exploring them on a JV basis. Teck, as you know, one of the largest zinc producers in the world. Their focus is the Red Dog mine in Alaska. They've got a zinc and lead smelter in Trail, British Columbia. So in the province, they've got a smelter that obviously will need feed. So, we see that as certainly our Akie deposit and their Cirque deposit as 2 of the additional sources of feed to that smelter in British Columbia. So right now, as I mentioned, there's the main project. You can drive there all year round. These roads are serviced all year round. The biggest town would be Mackenzie, about 260 kilometers to the south, where that highway starts up here. There's a CN rail head here that the rail line goes to Prince Rupert, a deep sea port on the west coast. The rail line also goes to Trail, British Columbia, where Teck has its smelter. And then you've got the largest hydropower plant in British Columbia, just to the south. So the infrastructure is actually pretty good. You can drive there. You don't need to build a road. You don't need to build a railway. There is power in the area. So the CapEx for something like this is not that daunting. It's actually very reasonable. We just completed a PEA, as I say, a few months ago. We'll get into that shortly. And here's just some holes that we've been drilling over the years. We're getting some great intersections, 20 meters of 15.5% zinc lead. We're getting 15 meters of 20% zinc lead. These are true widths. 15 meters of 22% zinc lead last year. So it's a very mineable ore body from underground. Here's a long section. So basically the red is the indicated resource and the yellow is the inferred resource. And you're looking at over 30 million tons, with 75% of it being indicated, so high confidence indicated category. It's basically a massive rectangular slab of mineralization I mean, if you took your piece of paper and held it up, it's basically 1.3 kilometers along strike, 800 meters dip, and on average 20 meters wide true width. So you've got this really massive tabular ore body that dips at 70 degrees. So if you came in from the side of the hill to mine it, it's an ideal underground mining situation. And importantly, it's open along strike and it's totally open at depth. So this could be certainly 40 to 50 million tons if we continue exploring it at depth. The resource, as I mentioned, 75% of it's indicated, 25% inferred. If you just look at contained metal, you're looking at almost 5.5 billion pounds of zinc, 1 billion pounds of lead, 13 million ounces of silver, and that's just in the known ore body. Again, room to expand. It's an ideal underground mining situation. This past year, we also did a pretty extensive metallurgical program on the property. We sort of studied the breadth of the deposit to get an understanding right across. And we were very pleased to get, on the zinc side, 89% recovery, into a concentrate grading 52%. The lead is 46% recovery into a concentrate grading 45. I mean, this could be improved a bit, but the reality is this thing is a zinc deposit. 90% of the value is in the zinc. So that's, the main focus, certainly on the zinc concentrate. It's a clean concentrate. There's no deleterious elements. So, that also was very nice to see that in terms of the results coming back. And, we've been receiving a lot of compliments from a lot of the larger mining groups that have approached us about the quality of the metallurgical program and what they're seeing in terms of the results. The PEA, as I mentioned, JDS Mining out of British Columbia did this. JDS Mining has built mines in northern British Columbia, so them doing this again was I think great. As again we get comments from people saying that good group to do this, given their experience. So we're looking at a pre-tax NPV using 7% discount of 650 million, 400 million after tax, 35% IRR, 27% after tax, 2.6 year payback. The capex, as I mentioned, very reasonable at 250 million Canadian dollars. Again, that's not going to scare anybody away. The metal production over life of mine, 3.2 billion pounds of zinc and 360 million pounds of lead. So 10-to-1 sort of ratio zinc to lead in terms of the value in the ground. And certainly there's opportunities for continued refinement through additional studies, and the deposit remains open at depth to increase the mine life. Right now at 18 years. So it's a long mine life, open to expand to 20 plus years. So very robust numbers. We've talked about most of this stuff in the previous slide. In terms of the peer group, I mean, if you look at sort of what we're trading at in terms of per pound of zinc in the ground, this is a little bit dated, but having said that, it holds true in that we're still trading at about around 1/3 the value given to a peer group in terms of what we're valued at in terms of per pound of zinc in the ground. So I do think, there is, great value in terms of getting the market at these current levels, given that I think we are going to re-rate, given that we are talking to some big groups right now based on the PEA. We've had one fly out 3 times to Vancouver to meet me just for a night to go to site. There are 4 site visits in August. So, there's certainly an opportunity here to have a very healthy return. Arizona Mining was taken out in June for about 2.1 billion, and I think that's certainly led to a lot of interest in us as sort of what's the next potential takeout. Kechika Regional, again, that's the exploration potential in the belt. This is the main development. The main value here is at Akie, but we do plan on drilling some of these properties and then sort of discovering those new deposits. Mount Alcock that I mentioned had a 9-meter hole of about 9.5% zinc lead. There's been no drilling there since that hole many years ago, so certainly one of our targets in the upcoming season will probably be to start drilling Mount Alcock. We've talked about most of this stuff already in terms of the drilling. Recently, the underground permit, we extended that. So it's 3-year underground exploration permit has been extended good till 2020, the end of 2020. We have some drilling results still coming from this year's program, and we focused actually on areas outside of the main deposit. We've been drilling 4 kilometers away from the main deposit, 2 kilometers away from the main deposit, where there are many targets in that belt where we think there's additional mineralized zones, and so we're trying to chase some of those down. The last slide, really. I mean, so in summary, the Cardiac Creek deposit is one of the largest undeveloped zinc-lead silver deposits in the world. It's attracting investment from big mining groups. We already have Tongling, Teck, Korea Zinc. We're in discussions with others. I mean, it is high quality. It's of a scale in terms of over 30 million tons at a grade at 10% zinc lead combined. It's in a jurisdiction that's friendly, and it's got this district scale exploration potential. That's what majors look for. So it certainly is, I think, of interest and unique in the zinc lead space. We put out a very robust PEA recently. Again, I mean, every time the price of zinc goes up 10 cents, the torque on this thing is incredible. I mean, it goes from $400 million, well, 600 million pre-tax to 900 million in terms of the IRR. We've got the permits in place to go underground and continue exploring from underground. The infrastructure in the area is very well established. CapEx is very reasonable. And we're significantly undervalued versus our peer group. So I do think, given the chronic shortage of zinc, the lack of new mines coming into play, the increase in demand, if you're looking for an investment in the zinc space, I think at 38, 39 cents, it's a great investment. Thank you for your attention. Yeah, appreciate it. Yeah.
This report brought to you by the Richmond Club, where investors and high-growth companies meet.